Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thanks for coming on again today.
Good afternoon, Devin.
Well, stocks on Wall Street were down again overnight, now on a four-session losing streak since we heard from Fed Chair Powell last Friday. Fed officials have in fact continued to call for higher rates. European stocks also down on concerns over a recession. What's the story in the global markets?
U.S. Stocks fell across the board Wednesday, marking the fourth straight day of declines driven by an expectation of tighter Federal Reserve policy. Major indexes slid between 4 to 5% in August, their worst monthly performances since June. The S&P 500 dropped 0.8%, extending its monthly loss to 4.2%. The Dow Jones Industrial Average fell 0.9%. That pushed the blue chip index to a 4.1% decline in August. The tech-heavy Nasdaq Composite slipped 0.6%, furthering its monthly loss to 4.6%. In Europe, major markets in London, Paris, and Frankfurt fell over 1% in a day. A data released showed the inflation in the Eurozone rose to 9.1% or near in August. A major gas pipeline that connects Western Europe to Russia was shut down on Wednesday for maintenance, causing concerns that supplies might not resume.
Well, Korean stocks were down today significantly as well, by more than 2.25% on the KOSPI and the KOSDAQ. Retail investors apparently seeing a chance to buy, though. Virtually every sector lower today, including the big chip makers, car makers, and tech. What's happening in the domestic market?
Against last 2 days' rise, domestic market dropped in a large scale today. Actually, foreign investors have been purchasing domestic stocks over 5 trillion won from the end of July, but they reversed trading by aggressively withdrew money from Korean equity market today. Foreign investors' net sales amount to 355 billion won. Since U.S. markets are declining and geopolitical factors in Europe is worsening, there still is a high possibility that domestic market could be adjusted even more. The benchmark KOSPI retreated 2.3%, and KOSDAQ also dropped 2.3% today. In KOSPI market, domestic institutional investors also massively sold stocks up to 832 billion won. Top 20 large cap stocks all dropped today except LG Energy Solution. Samsung Electronics dropped 2.2%. SK Hynix also lost 2.9%. But LG Energy Solution increased 0.1% today.
Well, looking at oil prices, Professor, West Texas Intermediate's now below $90 a barrel. Brent crude futures down more than 2.8%. It seems the concern is that COVID restrictions in China are going to slow down growth for the rest of the world. What's behind the decline in oil prices? What's your outlook?
Oil prices shed nearly 8% over the past 2 days and posted their third straight monthly declines. That could be a sign that a recession worries are upstaging concerns over dwindling supplies of crude in international oil markets. Benchmark U.S. oil futures ended Wednesday at $89 a barrel, down from Monday's closing price of the $97 a barrel. Brent crude, the main international price, fell 12% in August to $96 a barrel level. Also, declining trading activity has fostered wild price swings and sent oil prices on a bumpy ride from more than $120 a barrel in March, right after Russia invaded Ukraine. Fears that Russian crude would be shut out of international market by sanctions, leaving the world starved for oil, that have helped lift the prices. Expectations for demand to decline amid deteriorating economic conditions, particularly in China, have pulled them lower. Lately, demand concerns have been winning the tugs of the war.
Well, now zooming out a bit, Professor, the Korean economy grew in the second quarter by 0.7% as expected, though exports are strong. Korea is running a deficit, as you know. So with all that's going on globally, do you think there's a risk of the economy actually going into negative growth here in the latter part of the year? What do you make of the situation?
Overall, if Korean economy maintains 0.3% economic growth in third and fourth quarter, Korean economy will be growing over about 2.5% on year for this year. Korean economy grew 0.7% in the second quarter from the previous quarter, thanks to a recovery in private consumption with eased social distancing measures, according to Bank of Korea's adjusted data released on Tuesday. The on-quarter growth rate posted a gain in the 8th consecutive quarter. Bank of Korea says its annual growth target of 2.7% will be achieved if Korean economy goes well over 0.3% economic growth until the fourth quarter. Compared to a year earlier, which is more used measure for economic growth, the second quarter figure constitutes 2.9% growth. Private consumption increased on quarter by 3% in the second quarter, while facility investment decreased by 1%. Export declined 3.1%, which is the worst performance since the second quarter of 2020.
Got it. All right, Professor, we'll have to wrap it up there for today. Thank you, as always, for coming on the program. Really appreciate your insights.
Thank you very much, Devin.